Hello guys, how you all doing? Well, I'm good myself, and yeah, I didn't get a lot of comments yesterday, so I'm just gonna go with this one. Remember, I always advise you guys to just bring questions so that when I make videos, I just pick one question and then I just address that. So yesterday I didn't get questions, so I just got this comment. So I would like to make a video based on this one. So I hope, remember, I always show you how to draw your zones, how to look at different time frames. But now here's one thing that you need to pick. So the guy is saying when you are marking the bigger structure or trend line. So what it basically means is that when you open your higher time frame, and then you mark your area of support and your area of resistance and your trend line. So that's what it means on a higher time frame. We can also find smaller structures in the bigger structure, and that will be structure inside structure. Do you all agree? So this one, what it basically means is that it is very important that we always mark our key structures on the higher time frame, so that, remember, when you have it marked on your higher time frame, even when you're switching the time frame, when you're switching to the smaller time frame, you will still be able to see where that higher time frame level is, or where that higher time frame trend line is, so that when you are taking trades on your smaller time frame or your execution time frame, the other name for it is execution time frame, you don't want to go against the higher time frame structures, because when you're on that execution time frame, you'll be able to see what's happening on the other side, so that you know that if I'm holding a buy trade and now the price is approaching a higher time frame bearish trend line, I need to be preparing to exit that trade, because we don't predict that the trend line is going to be broken. That's not how we trade. No one knows when the trend line is going to be broken. So rather, we wait for the trend line to be broken, and then from there, that's when we'll take trades in that direction. So it is very important that you mark your accurate, make sure that it is accurate. Don't just mark it on a higher time frame. Mark your support, your resistance, or the zone. I always say zone above and zone below, then the trend line, so that when you're going down, you have that picture in your head to say, on the higher time frame, this is what is happening. Then it means when I'm taking trades in this smaller time frame, they should be in respective to what is happening on the higher time frame, so that I do not go against the structure that side. So I hope this makes sense, good people. I hope it makes sense. So if you are only watching this as a first video, make sure that you check the other videos, because of what the concepts that I will always be mentioning is the concept of trend line, how to do mark your zone, and how to do a multiple time frame analysis. So these are the ones that are very, very, very important. So it's important that it's impossible that we do an analysis and not touch on them. So let's just open a picture, a chart. So any currency or stock or whatever, then we go there and pick the two time frames that we're gonna assess on, and then we mark the structures there, and then I will show you how you'd be planning to take trades when you're going to the smaller time frame, with keeping in mind the structure that you saw on the bigger time frame. So let's just pick one chart and then we'll continue with this. All right, so let's just use the Euro USD structure to demonstrate the higher time frame and the lower time frame structure inside the structure, right? So on this chart, the lowest point is this one. So which means when you're marking your what you will do on this higher time frame, you will just say my area of support is here. My area of support is here. So when the price was still, you can see the price is still inside what? You know that on my higher time frame, the price is inside my monthly support. You keep that in mind. And we always mark the level below and the level above, then which means when I'm going above, I'll put my thing here. There's a pause somewhere there. Remember, you're not analyzing, I'm just showing you how to mark the levels, like based on the comment that the guy made. So you are on your higher time frame, you mark your support and your resistance and your trend line. So in this case, it's not easy to put a trend line. Why? Because this is just a one move to the downside, so it means your trend line here will still be up there up until the day you have this, then you can bring it there. But because you don't have that, The trend line on monthly is still there, and then the opposing resistance is here. The nearest resistance and the nearest support is holding, which means you are now searching for trades to go up. So now let's say you are trading monthly, weekly, and daily. So monthly we know what is happening, and weekly nothing much is happening. We're still inside the same monthly area of support, and the weekly trend line is here. Look, it looks different to the one that you had on monthly. Why? Because on monthly we didn't have this. We didn't have that. It was just a smooth move. Remember, the lower you move into with your time frames, the more candlesticks you will see. So which means the structure is going to be different, and you'll be able to draw more areas of what your key areas. The same way our nearest resistance is not there, it's somewhere here, you see. So but that's not the point. The point is that we are looking to buy inside the current monthly demand and the weekly. The problem now, the challenge would be the weekly trend line is too close. It's too close. So that's what I'm saying. When you're keeping it like this, even if you're trading the daily, you want to execute on daily, you still need to keep in mind that the higher time frame. Remember, you'll be executing on daily, and daily is it's smaller than your weekly, so you can't use that daily setup against the weekly. How can I put this? The weekly trend line. So let's say on daily you find a reason to buy there. Obviously, you can't just say I'm targeting all the way up there. The only way you can target that is if you are trading the entire monthly zone. To say I'm moving from, meaning I will not move my stop loss until you have the 2:1. So you're still holding. But because you're not trading the monthly, you execute here on daily, and you can't ignore the thing. So you can see the price was approaching the higher time frame opposing structure, bearish trend line. You're holding a bullish trade, you're approaching a higher time frame bearish structure. You are planning to exit your trade. We don't predict that the price is going to break the structure. We would rather wait for the price to tell us what it wants to do. If it gives you a reason to sell, still you can sell. Why? You are selling at the higher time frame, a weekly area of resistance. You are seeing rejection structures or engulfing, or up until the day the price breaks that, you are not going to continue buying against this. Because remember, if it gets broken, then you don't count it anymore. So let's check what the daily was saying. Yes, you're still leaning to the upside, but we can't ignore the trend line. We just can't, especially because it belongs to a higher time frame. So if let's say on daily, remember this is a weekly trend line. I said we are treating each time frame as an individual time frame. So this trend line does not look nice on daily. It is not a daily trend line. So because you moved it down in your time frame, you will find more candlesticks, which means you can have a different trend line. So on daily, your trend line when you're going down was here, and this is the level of daily support. Remember, the guy on the comment mentioned a level inside a level. So this is the daily support inside monthly support, and this daily support, it broke the trend line. It caused the break of the resistance there. What I mean by that is that we had a resistance there, and this one gave us a move and violated both those structures, which means it's a key area of support. We can take trades from it. It is inside the monthly area of support, which is now we have went with the buy limit and put my stop loss outside. And you can see that's it. That's how you trade. There's another guy that asked me, how do you execute? It all depends on the setup that we're having at the time. But yeah, because the daily area of support is inside the monthly area of support, and we're just bouncing from a weekly. So it's more like I'm trading from monthly fighting against weekly. I have a higher chance of winning, so I can even go with the buy limit. But if you are someone that always waits for confirmation, you are more than welcome to look for your confirmation, your rejection candlesticks, your engulfing. You're more than welcome to do that. But here I just wanted you to see that it's important that you mark your structures correctly on your higher time frame, so that even when I'm looking at daily, at least I still know that, oh, this zone on daily, it looks too big. It means it belongs to a bigger time frame than the one that I'm looking at. So which means whenever we inside this, I know we are inside a higher time frame support. So I cannot be looking to sell. I cannot be looking to sell. The same way now when it gets to this, oh my battery, sorry about that. So the same way now, if the price gets here, if it gets here, I'm not gonna be looking to sell, because this is too close now. Unlike this, the space between this and this is big enough. But imagine now I am selling from this just before we hit the opposing high time frame structure. So you see, it's not worth it. So here now we just, if you holding that, I was gonna, if it was me, if I had taken that, I was gonna exit here and then leave one trade running, and with the stop loss above, so that if I get a breakout, I will still leave it there and mark the new area of support, and then I can continue buying like that. I will do that. But now selling, it's out. We are no longer talking of selling. That's where you need to learn. Remember, I said the important concept is the concept of trend line, the concept of different time frame analysis, and the concept of the support and resistance. So when you are able to interpret those three, you know that this is a weekly. In this case, I'm gonna end it by saying this is a weekly trend line, which is bearish, and we've got a monthly support, which is a bullish structure. And because of what, the space now between the weekly and the month is very small. I mean, it's not worth it. I'd rather wait for the price to eliminate the trend line or the bearish structure, so that I know that everything now is pointing to the upside. But this one here, it was a very nice area to take your buy from, because of what, it is a daily support inside monthly support. So you are more than welcome to take that. I hope you understand the concept of the comment that the guy made, which is a structure inside structure. So that's why I decided to pick his comment and make a video about that, so that I can show you structure inside structure, which is a what? Daily support inside monthly support, how you take trades like that. So it's very important that you mark your structures accurately from the higher time frame all the way to the lower time frame where you'll be taking your trades. So I hope this concept is not going to confuse you. And then, yeah, I've touched on it before, but this is just to add on top of the stuff that I already mentioned in the other video. So if you haven't watched that video, make sure that you try and watch them in the very same order that I posted them, so that you know that when we are moving forward, everything connects and stuff. So yeah, I'll see you guys in the next one. I'm going to end this one here. All right, sharp.